Thank you so much for coming today. This means a lot to us. We did try to launch this meetup in this very spot in April of last year, and as everybody knows, it didn't happen. So it means a lot to me that we were able to get this launched and just a great turnout today. So thank you. Great to see former commodities colleagues and investors and friends and so forth. Thank you to my wife, and my kids are here, and for Ravi for being a great co-host. The purpose of the meetup is really to share, what we have found. I mean, that Ravi and I both transitioned from Wall Street to multifamily, and now that I personally have, 3 deals that I've invested in going full cycle over the next few months. So, those 3 deals will have doubled the money that I've invested in just a year, 2 years. So, it's real. I think, coming up here and talking about that and just saying it's been a great diversification. And, me coming from the commodities world where, commodities, oil went to 125 to minus 37, and to something as stable as multifamily where, our properties or occupancy is around 95% now. So it's just been a great transition, and, over the next few months, we'll be having different speakers come in, whether brokers in the area, lenders, folks that do tax. The huge thing on multifamily that has been just a game changer for me personally, I got over a $200,000 refund from the IRS. So, I wish someone told me about this, a few years ago. So if you have a spouse that is inclined in multifamily, it's just a great way to generate some significant tax savings. So anyway, I wanted to introduce my co-host, and then we'll introduce the guest. We're very excited, and it's been an honor working with a good friend and former commodities colleague, Ravi Ramachandran.
Thanks, Ryan. Once again, just to echo Ryan, thanks for everybody for coming out in the middle of the day. I'm Ravi. Just like Ryan, I was in the commodity space. Completely independently went into multifamily. I think there's a kindred spirit between commodities and real estate. I used to do investor products. We used to create products linked to commodities and market it to investors globally. And it was always seen as an inflation hedge, a diversification in your portfolio. And the other hard asset that I always hear about is real estate. So it's kind of a natural transition for me. And then once I transitioned, I realized Ryan was in the space. I knew him from commodities days, so we decided to figure out how we can work together more. And this is kind of the first step. Hopefully we'll do deals together as well. So I'm now invested in close to 2,200 doors in the last 2 years as a passive and as a general partner in about 4 deals. And so really excited to share and meet with a lot of you and learn from you guys along the way. A couple of administrative items. You'll notice in front of you there are some placards that have QR codes on them. There are 2 sets of QR codes. On one side, there's QR codes to connect with Ryan and myself. Please do that. We would love to hear from you. Drop us a note. If you scan the QR code, you'll get a V card with our information. So please do write to us, connect with us. Love to hear from you. And the other side, there's a cue card for a sign-up form. So to sign up for this event, just to let us know that you came, give us some feedback on what you'd like to hear about in the future. So please, if you could do that, if you could sign up. I know some of you signed up hard copy as well. I have that information, but we would prefer electronic. And just to help, not necessarily incentivize, but we wanted to thank you for coming out. So we have this Google Nest thermometer. We thought it was apt for multifamily because we do energy efficiency, water efficiency in our properties. So this can help make your house more efficient. It's a Google Nest learning thermostat. So what we're going to do is our esteemed guest, Ryan Weiner, is going to present and then host that. Based on the number of people who sign up, we're going to let him pick a random number between 1 and the number of people who signed up. And whichever number he picks,
so at least one of you guys will like it.
One of you guys will get the thermostat. So once again, thank you for coming.
And now to our guest speaker. We are very happy to have Ryan Weiner. I met Ryan, it's probably just over 2 years ago when I was getting into the space. And one thing, he managed a company that had, is it 26,000 units? So I don't know how many properties it is. It's a lot of properties. And he made more than 2 hours of his personal time on a very late weekday to sit down with my business partner and I and answer all of our questions and show us around the office, show us his car. And so, you know, it's something that I appreciate when people make the time for you, especially when, you know, at that point we were starting out. And we didn't forget that when it came our turn to pick, when we closed our as lead sponsors, our first deal in San Antonio last year, and we were very honored to hire Ryan's company to manage that property. And his company then since moved to Houston, and their first property that they managed was ours. Their second one was ours as well. And we actually transitioned the existing manager to Ryan's company, just as a reflection of how the success that we've had with his company. And now they manage a number of properties in Houston. So Ryan, thanks for coming out today. And
yeah, I want to thank both of you guys for inviting me. And you know, we love working with you guys, and two very sharp guys. Appreciate it.
Thank you. So we'll jump right in. In terms of logistics, they'll come around and take your orders. So I think they had a shorter abbreviated menu just to make it logistically easier. And then we'll have time for Q&A. So if you have questions, just let us know. And you can come up here, or I could repeat it for everybody to hear. So Ryan, just as we get started, just walk us through your background. And
Okay, so I grew up in Southern California in Orange County, Seal Beach. I went to UC Santa Barbara, graduated in 2000. So after a 5-year vacation/party, it's been like a 20-year sprint. I went right into finance right out of college, did that for a few years, then worked in land development. And all during this period, I bought single-family homes, duplexes, stuff like that I could buy. And it was about 4th quarter 2005, I went into one of my duplexes, and my cleaning lady told me that she was excited that she was buying a house, and she got a $470,000 stated income loan. And meanwhile, I'm paying her $75 to clean an apartment. So I congratulated her, but as I left, I called a friend of mine who was a broker, and I decided to sell everything and look across the United States where I wanted to do a 1031 exchange, which is basically a deferred tax way. It's a way to defer taxes by selling a property, and within a certain time period, you have to buy another one. So I quit my job with Lennar Land and started looking across the United States where I wanted to reinvest. At that time, Texas was very depressed in terms of real estate pricing, so I liked DFW. It was, you know, Fortune 500 friendly, large airport, that sort of thing. Pretty similar to Houston. And so, you know, I moved out here to Texas and started looking for deals. And you know, I found an 82 unit, a 63 unit, with the idea that I was going to have somebody else manage it, that I was going to go to Costa Rica and surf and start a propane distribution company or something. Well, best laid plans, it didn't work out that way. I met my wife, I think, 3 months after being here, or in Dallas anyways. And I think it was a few weeks later that I fired the management company. They weren't doing what I wanted them to do. And I didn't have a job at the time, so I started just working on it. It's a basic, in many ways, at a small scale, it's a very basic business. As it gets bigger, it's more complicated. I did that and started representing buyers from Southern California and South Florida as a broker. And then, you know, they'd come out, I'd show them properties, and they, you know, every single time, 5 times in a row, it's like, we want to buy it, but we really mandate that you're going to have to manage it, because we just don't trust, you know, the rest of the marketplace, and we've heard a lot of horror stories. So I kind of got pulled into the business 2007, 2008, kicking and screaming. I didn't have a big dream to be a property management company or owner or founder. Literally, I started my business on a futon with a laptop and a few $100,000 in exchange money. I mean, that's how I started the business. And just word of mouth. It doubled every couple of years. You fast forward 10 years, and we had over 20,000 units. Kind of the same way that we also had a direct supply chain from China with about 26 SKUs, maybe a few more now. We We don't go through an agent. We actually have an office in Guangzhou, China. And we source factories directly, and we design the products and have them built to design. So we built better products for high churn items on work orders and make-readies, higher quality, same or lower price as the competitors. And the reason we can do that is because we sell exclusively to our clients, so I don't have marketing, sales, accounts receivable issues, all that stuff. So we just cut a lot of the margin out, and our clients get to benefit from the better products. As Ryan can attest to, and so Revy too, is you make ready a unit, there's an upgrade. It really depends on how the upgrade is done for it to really have that flash. So I kind of fell into that business as well. I had people reaching out to me, and I was like, man, I should go out to China. And so that's how that business started around 2013 or 14. 2014. Same thing with construction. A few of our clients were getting ripped off by contractors. After about 6 months of that on a particular project that we were on, I was like, look, I grew up from a family. My father was a contractor, my brother's a contractor. I know that business, and I have lots of people working for me. Why don't you just have us do it? And we did a very good job for them, and it kind of sprouted a new business. So all that to say is, I didn't have designs. People have been on some entrepreneur podcasts and stuff, and they're like, what were your plans? And none, really. Everything was 5 steps ahead of me about as much as I planned. But just taking opportunities as they come along. So I don't know if I'm getting a little bit long-winded on it, but so that in 2019 we took on a partner with a private equity group. I still have a large share of the ownership, but we have a private equity group out of Florida that has helped us improve our processes and more professionalize the business. And to be candid, it worked out very well for me, and I got lucky on the timing because it was literally a month before COVID broke out in China. So it's been wonderful working with them. We built an awesome team down here in Houston and in San Antonio. There was a few transitional issues in DFW for a few months, but they've really responded. They're an operations-focused private equity group, so it's been very, very beneficial for us.
That's great. I appreciate that. So, to go from, some clients from Florida and California to, where you are today, just walk us through the scaling of that, building out teams, systems, processes.
Yeah, so, it's very dependent. In a service business, you're about 80% the people, 20% the processes. So you can have the greatest processes that ever existed, and if you don't have the people to implement them religiously, then it doesn't work out. So, my main focus, let's call it through the first 5 years of the business, was really just, I need somebody to help me with operations. Let me do some interviews. And I have a sixth sense. It's probably my biggest skill set is locating talent, even when it doesn't have experience attached to it at the beginning. So that's how I met Fernando. Hired him for $15 an hour. That's how I had met Israel, was my third hire. Even Alan, who's no longer with the company, but helped us build it a lot. I hired him at $16 an hour. But I knew that they had those qualities and the intelligence to move up that ladder. And that always put pressure on me because to have the best team, the organization, and I call it the organism, has to be growing. Otherwise, you can't keep the best people. So I've always spent at least half of my time on the business development. Now, 95% of the time on the business development. But it's really about finding the right people. There's certain process-related things. If you watch our video on WehnerMultifamily.com, you'll see the proprietary technology that I had developed through. I think I developed that in 2015. Had the leak-aware application that tracks water usage and identifies leaks, and then we now have a premium one that I'll go through later. But all those processes, the different softwares, all that stuff, that's pretty definable. The harder to define thing is getting the people that are, going to do the blocking and tackling and help build some of those processes along the way. I mean, candidly, the first 2 or 3 years of my business, I didn't have the proprietary technology. I didn't really come from a heavy tech background, and it was really treating the client's asset and finances like they're my own, and having that culture in my business, and attracting the type of people that believed in that mission statement. And if you have a great manager, a very conscientious regional, and not good processes, guess what? The building still does well. And if you, on the flip side, if you have great processes and you don't have the good people, it doesn't work. Of course, to scale, and when I got from 5 to 7,000, you're at that level. You do need to have more and more processes. It's a fine line to process orient the company, but also not to take the heart and soul and the culture out of it. It can't be a complete. It can't be. We're not just building widgets.
I think a number of people in this room are just trying to learn about the space, and so maybe they don't fully comprehend what property management is all about. So let's say myself or Ryan acquires a property or wants to acquire a property. We think it has potential. Tell us how we would engage with you and what value you bring towards this organization, if you will.
So, this isn't with every management company. Some do this to a greater or lesser extent. I think we do the most pre-analysis. So, if you reach out to to Jimmy and our department that deals with new business, we'll look at the deal that you have. It'll be we'll have physical boots on the ground, go and drive the area, know what the area, what the criminal or lack of criminal element in the area, where the economic drivers for that specific area. But then we also do a full operating forecast, 1 year, 2, 3, typically only 1 year out. And we will actually go through the T12. You provide us with the T12, the rent roll, and we will go and do our full analysis based on what we can do when we manage it. And so that's really where a huge amount of preliminary value comes from our company that is lacking in most other companies. So we will underwrite every single line item on the deal to provide a full operating forecast. It will not be based on dividing numbers up by 12 like brokers sometimes do and just put numbers in there. We know where payroll prices are going. We know where there's so many different factors. With supplies, even 2 years ago, obviously we've all experienced some inflation, and we know, I know we used to underwrite $700 a unit on a turn. Here's why it has to be $900 a unit on a turn. These are made up numbers, so you don't have to write down the actual figures. But the reason we will have a very good touch base on that is we literally have 900 employees. We know where employment trends are going. We know what things are costing and where things are increasing or decreasing in cost, because we have a sample of 25,000 plus units that we derive those numbers off of. This will help you. You can extrapolate. We do it before debt, so we don't underwrite debt in the operating forecast. It's really only operations. We have a little function in there that you can put your debt number in. But we're not in the business of putting debt together, so we don't stamp our name on that stuff. And we will we'll look at every single element of that deal. You can look at where the NOI comes out, extrapolate to where it makes sense for you all to, at a purchase price level, how you want to do your letter of intent or letter of interest. So you can extrapolate, get to the price where you can hit the returns that you need to have for yourself and or for investors. And it's not, I always tell everybody, look, you're your own best advocate. Probably second to that is the property management company. We don't want to forecast things incorrectly. If we're not hitting our numbers, it's not a good business, not a profitable business doing third-party property management. I mean, we really want to be able to hit our numbers. And so, but even given that, your name is on the loan, you're the one that has, a lot of your investment money in there. It's important, and this is something that we really love working with Ryan and Remy, and for a longer period of time, Ryan is, they go through all those numbers themselves as well. It doesn't take an MBA to do it, by the way. Real estate it's not even up to the level of algebra. It's really pluses and minuses, maybe a little bit of multiplication. So it's really just looking at the details, and there's really the only stupid question is one you don't ask. So there are things that we have a lot of experience, and you may ask a question and we're like, this is why it's cleaning budget is going to be this, and this is why this is what we'll put our name on. But it really the people that do well for a longer period of time are the ones that are more involved with the process in terms of the numbers, the area, and they really understand what they're doing. Even if you don't understand day one, it's not that complicated. We'll guide you through some of the missing spaces that you may not have, but it still it pays back in 10x to be looking at the numbers yourself. And hey, why didn't you go up as high on the rents in the pro forma as the offering memorandum that the broker gave to you? Well, the broker chose the competitive market analysis from these 3 properties that don't relate to your property, so on and so forth. So it's good to get in the weeds, especially before you sign a PSA and have hard money go through. It's very difficult to get your money back once your earnest monies went hard. So it makes sense to put a lot of your own time in it. Where obviously besides yourself, we're your second best advocate. Everybody else, and it's not an indictment of brokers. They have a fiduciary responsibility towards the person that they've listed the property with. So they have to, ethically, they have to show the best picture that they can. And they're not operators. So some of that stuff they just don't know. And some of the things they have to put it in the best light. So typically I get an offering memorandum, I go to the section that has their pro forma, and I just tear it out and throw it in the trash. Other than a few things like taxes and insurance, it's really not, sometimes I don't even want my employees that are underwriting it in our business development department to even look at it, because human nature is you see a number, you start to point towards it. And I really want us to start flat-footed. A lot of these deals, you're going to underwrite yourself. You may submit it to our online portal for us to underwrite it before you do an LOI. We don't even want your numbers to start with for that same reason. We want to start flat-footed. You put the 2 analyses together, and we discuss where they don't match up, and then you make a decision. So it's an old adage that my dad was a carpenter and then a contractor, and it's, Ryan, you always measure twice and cut once. So that's something that really needs to fry into your brain if you've never bought real estate. It sounds exciting, and it can be very exciting, but if you don't do your homework, it can be a nightmare.
Thanks, Ryan. I'll just say that, before I ever submit an LOI, I make sure I have a PM budget so that I can validate my numbers. You go in, you get the OM from the broker, you get the G12, you rent roll, you analyze all the numbers, you come up with a number, but then where the rubber meets the road is the PM. They are the one operating the property for you, they know the market, they know the tenants, and so having that PM budget is just critical part of the process, certainly for me. And if
I could add to that, yeah. Even you get and we love competition. I'm a big capitalist. Even when you talk to other management companies, maybe it's in a market we don't service, you need to look at what went into their budgeting, that it wasn't a divided by 12 and do a monthly budget going forward with a 5% increase or something. that really does not protect you. There's a lot of little tricky things in income statements, profit and losses that people can put below the line, that legally can put below the line, that are going to be not really below the line expenses. They're going to be reoccurring. And so you need to see what they've done and have them just kind of speak you through it. And that goes with our company as well. And they've been on the other side of those phone calls. They've come back and forth with Fernando and other people on the team. So I mean to bloviate.
No, please. Yeah, so I just wanted to highlight, make sure that it's clear what the PM's role is in the whole acquisition and execution process.
Yeah.
So with that, I just wanted to ask you, Ryan, obviously you mentioned competition, there are people out there. So we know multifamily. So when an investor wants to acquire a property or an investor property, what characteristics should they be looking for in the PM? And how would you say, Ryan, Wehner Multifamily differentiates us?
Yeah, I mean, experience, knowledge base, and reputation. So, and some of it is as clear as speak to the people that work there and see what the culture is. Are they a culture of, does it feel like this guy or girl is treating this like if they were going to buy the asset? A lot of that you can smell, whether you have lots of experience or not. We've all been humans our whole lives. We've had to kind of look through that kind of stuff, but you want to make sure that they have an experience and a knowledge base of the area, that they put the capital and resources to provide the oversight and the analysis for whatever area that you're managing. And we came in here, I think your properties were the first couple, and a month later, yeah, we had a bunch of other ones. Even on this one, and I'd like to say we learned this not the hard way, but we did learn this the hard way. When we expanded to Oklahoma City, we kind of had a regional go back and forth, and then we just had a lot of brain damage for a year until we committed the funds to have somebody there. Here we invested heavily in the local resources in terms of employment, and relocated. Jimmy's now a Houstonian instead of a Dallasite. So we really put a footprint here and learned the different markets even before we made penny one in fees to support that staff. That's a big difference. I mean, that's why we've kind of started to hit the ground running here. And some of the other ones we stumbled at the year before we kind of got our hard team in. So that's one of the big things that you look at is culture, reputation, and what type of resources do they have wherever your apartment building is going to be.
There's someone that walked in just a little bit late. She was on a call. Elizabeth Wall. Say hi, Elizabeth. She manages our 2 properties here in Houston. Has done a fantastic job. Just very in tune with us as owners, and just really pursues excellence in all that she does. So that was Ryan's a big hire for Houston. So yes. Thank you.
She fits right in with the Weiner culture, so it's great.
So you mentioned finding talent. So what you touched upon, you kind of have that sixth sense. So maybe just talk to us about that, because this is very much a people business. So
it's tiered. I have a sixth sense at the higher level positions. I get lost with maintenance and managers and stuff like that. I know my limitations, which I say is an advantage in starting a business, right? So it's very dependent on, so the questions and answers are different from tier to tier. We're looking at on-site property management. It's really about the energy that the person exudes. It depends on the size of the building, how much experience they have. If you're on a 400 unit building and you can have a staff of 3 or 4 or 5 in the office, for lead managers, typically we go for somebody that is a leader and is good with numbers and can do reporting and can analyze things and is good with leadership over the supporting team. And then what we want in the front desk is somebody that's very flowery, very welcoming, I don't know the word for it, but very sunny and welcoming. That's what you want there. And then in between, some mixture of it. If you're on a 90-unit building and you can only have one person, you kind of have to get a mixture of both. What I always do is attitude and that welcoming attitude and those sorts of things, and taking personal responsibility. That'll correct a lot of other misgivings or weaknesses. So I've had on a building that I've owned, and this was like a story from like 6 years ago, and I was like, told the regional manager, I said, hey, I know this manager, she'll get the place full, this will become her baby, but I want to guarantee you that once every month or once every 2 months, she's going to do a deposit slip and I'm going to get charged $15. Now I can just hammer her on that, or that's just who that person is. And if she increases the monthly revenue by $7,000, then I have to take the good with the bad sometimes. So I'm always on the out, because what really pays us is people leasing the apartments and paying their rent, and keeping controls on the maintenance person's time. I mean, those are the biggest things that we can influence the performance of a property. I'm apt to be like, let's just go clean up some of their documentation, not on the leases, but on reporting to us and stuff. We'll be a little bit more liberal in that stuff if they can hit the numbers. Because at the end of the day, our company, my properties, my company's service business, if we can collect more money and have lower expenses, our formatting cannot be perfect and we'll be okay.
Get the big things right.
Yeah.
So in terms of those metrics and so forth, what would you say, are 3 metrics operators should focus on?
You talk about the KPIs. Yeah, and just as important as the KPI, it's the regularity that you monitor it. A lot of people want to monitor KPIs once a month, and sometimes you don't even have those figures till 2 weeks into the next month, and you're already dealing with a bad problem for 6 weeks. Then you have to switch everything around, and it's it's not cost effective to the property. So the cadence really, I believe, should be on a weekly basis. Some people do it daily. I think that's a little bit over the top, but on a weekly cadence, you have our reports called the PPP, and I didn't want too much. I didn't want to be counting toilet paper squares that were used in the last week. I mean, there is such thing as paralysis through analysis, or just spending way too much on the minutia. But newsflash, occupancy is a big deal. But what I look at on a weekly basis is not even occupancy. I look on how many new leases have we generated, how many have we lost, how many vacants do we have, and how many of those are made ready. Those are the most important. There's literally about 15 or 20 other line items that are important, but on a week-to-week basis. So if we have a manager go into a situation, or I buy a building and it's 75% occupied, every week I'm not going to wet my pants that it's only 79% occupied now, or whoa, it's down to 69%. If I go through and I see, we had 12 move-outs by eviction notice or whatever, and then we talk about those 12 move-outs, and if 7 of them were by the previous ownership, and we look through the files, and then they had credit checks, and they didn't have this and that, they weren't paying. Well, I don't focus a lot of energy on things that I have no control over. It's really, let's get them out. In fact, get them out faster. But I'm really focusing on, are they leasing at a good rate, and because that's the only way you change it. And it's by week. You don't want to go 3 or 4 weeks in and go, hey, you only leased 2 apartments on my 200-unit complex. Week 1 of that month, hey, you leased 1. What's the problem here? We had 3 pieces of traffic. What are we doing on traffic? This is a good kind of pressure on the on-site staff. And we're all human. We all do the same thing, out of sight, out of mind. When they know that they have to talk to you, and I try to keep my weekly updates to 15 minutes or less. I don't just kind of blah, 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 blah. I just, what were these numbers? What are the issues? Good, bye. You know, there's not 5 minutes of niceties at the beginning because I'm in a hurry. And I have a very short attention span. So it's basically, if we have an issue, we can bring it up for that week. You can course correct mid-month so that in September I'm not coming to horrible results. All of this was not in place 12 years ago. I've learned all these things by experience, the hard way. And I know that if you can stay on top of it, the other thing is that that manager is on the phone with you once a week for 15 minutes, or it may just be the regional manager. They're going to know when they're putting together their reporting and they're like, well, I got to show one lease. It just puts a more pressure on that manager to perform week by week by week by week. Whereas if you're talking to them once a month or once every couple months, you know, a lot of people only respond to, I don't want to look like I'm not doing what I'm supposed to get done. And that weekly touch point helps. So keep it short. You don't want to make it too long because it becomes like one of those wastes. You guys were in corporate world. How many of those meetings were just complete waste of time? So get to the point, move on. You can do a follow-up email saying it was nice to hear from you. I hope your vacation went well. Yeah. You don't want 6 other people on the phone listening to you talk about somebody's vacation.
Obviously, when you boil it down, it's a very simple business, right? You want to maximize your revenues and minimize your expenses. Mm-hmm. The difference is your NOI.
Easier said than done.
Easier said than done, exactly. So one of the products you have is leak-aware. Can you tell us about that? I think it gives a good illustration of how we look to optimize expenses, right?
Yeah, so we have the basic leak-aware, and I've carved that company out. Although Wehner Multifamily is allowed to use the basic for infinity. That was part of our agreement. So we have a basic mobile app that the maintenance tech just types in the meter reading every day, 5 days a week. It'll show when there's a spike from the expected daily use. It works. It's better than anything that I've seen in the market to date, and so it helps you identify leaks way in advance. If you find a leak on one meter, let's say a 100-unit deal has, and I always use 100-unit deal as an example because it's an easy round number. It's easy to get to percent with it. If you have a 100-unit deal, you have 4 meters, and they do 4 readings. That meter has been mapped to the units that it affects, and so we have a full workflow device. So as soon as there's a spike, it shows up on the phone of the maintenance tech, and they have to do an audit, and it has a template for each unit. It pops up every unit that they have to walk, one at a time, and it's very interesting software. I'm not giving it enough justice. But they go through every unit. They do no leak, major leak, has photo and video capability, plus their regional, plus the ownership will have access to, they know a leak happened, and they know how long it took to do the audit and how long it took to fix everything that was found in that audit. That really, just knowing you have a leak but not having the whole workflow part of it is almost worthless. Having the whole workflow process but not having a dashboard for the regional managers to be able to, in a summarized version, pinpoint it quickly and create accountability to the on-site staff makes the product almost worthless. Again, all this was learned through hard knocks. I've come with a premium product that has literally saved about 40% on my water expense. I installed it all in March. And so now we have a product. It works really wonderfully. I'd love to go through it with you later, but we actually install a device on the meter, and there's a hub with a cell phone, it goes through cell phone waves. And so it measures it 25 times a minute. 4 times a second. So it just basically measures the revolutions on the thing. So what it's worked great with it is even on some of my properties, you buy it. The only way we can get to a real expected daily use is looking at previous water bills and going with the lowest month and using that as expected daily use. But if you buy a property and it already had a few leaks, you never know you have a leak. With our new software and the algorithm, it has an algorithm that shows in 6 hours, if it never touches for 1/4 of a second down to 0, it'll flag a leak. Just with that, putting it on my properties, I rolled it out on my own first. I've had across 7 properties, my monthly water bill is $28,000 less a month. So I have one real bad performing asset in there, so it's not always going to be that one was literally about a 50% overall drop in the water bill, not usage. And I don't want to get too much in the weeds, but in Texas and most municipalities, commercial water usage is tiered. So your price per gallon up to, I'm making this number up, 10,000 gallons is called 2 pennies a gallon. But from 10,001 gallons to 20,000, it might double or go up 50%. So even though I say 50% of my water bill, we looked at the water usage, it was only about 25% lower. So the higher that tier goes, the more it is per unit of water that you're buying. So water's huge and it's a controllable expense. And it's just the nature of, do you have something that can identify the water leak that doesn't give you false alerts? And it's worked excellently. Now I've rolled it out to about 15 other properties. Same deal. It's about minimum. It's been a 25% drop in the water bill, not in water usage.
Just to illustrate the numbers, when you said $28,000 in savings,
It's huge.
at a 6 cap, that's $500,000 of value created.
No, that's monthly, so
Even more.
yeah, so it's a lot. Yeah, the math is pretty easy. So let's say you have a 100-unit deal and it's $5,300 a month in water, and that's about $53 a unit. That's within the range. You put this device on, you put you let this stuff do what it's supposed to do. It doesn't fix the leaks for you, but it helps you track the audit of the leaks and the repair of the leaks. Let's say it goes only down to $4,000, and the product on a 100 unit would be about $250 for the premium would be about $250 a month for the licensing fee. You're looking at a net change of $1,000 a month on a 100 unit deal. That may or may not make a huge bit. I mean, it makes some difference. I mean, on the cash flow, you have the extra $1,000. It's great. It's still a great ROI. But like you said, if you go to sell the asset, call it 2 years from now, $12,000 in annual EBITDA delta up, or not EBITDA, NOI delta up is 200. At a 5 cap, is 240 grand in value. So it just kind of explodes the payback. But even given just the daily cash, the monthly cash flow, makes sense.
So, as we wanted to get some Q&A from the audience, but before I do that, I just want to ask Ryan, what advice do you have for people getting into this business?
That's a loaded question. The people that do the fact checking, to put more work up front, are the ones statistically that do better in this business. Yes, over the last 5 years, people that just get excited and buy anything have done well. That's not always going to be the story of multifamily. Any deal that you're looking at purchasing has to make sense, even if there's a pullback in the economy. I really don't think that, in my own personal opinion, and I could be wrong, I typically look at things from a worst case scenario. Real estate is a get rich definitely over time. It's not usually a get rich quick thing. And so even if the economy goes down, interest rates go up, and you're at lower equity, if you're in a position where rents are still getting paid, you're making cash flow, you get to live to fight another day. And so really focus on how does it return me money monthly. And the gravy is if cap rates constrict and you make a huge exit, really just focus on, can this thing make money in a pretty low risk basis on a monthly basis. Everything else typically takes care of itself. You know, the tax benefits are the tax benefits. We don't have control over interest rates. We really don't have control over the liquidity, the money supply, and whether cap rates are going to be 4% or 6%. But where we do have more control is, do I have the water bill down as low as possible? Do I have the right person in there that's keeping tenants that are good and we're not having a lot of turnover? Are we capturing 2 leases per every 1 lease of the neighboring property? Those are the things that I would focus on, the fundamentals, the meat and potatoes of the investment, all the exciting stories we've heard from everybody over the last 10 years, and I have a lot of those stories as well. Some of the factors that lend itself to those scenarios are out of your control. So, don't focus on getting lucky. Focus on making money no matter what. Things go really well in the overall macro economy, you're going to do even better. If they go bad, you're going to be doing better than your neighbor.
So, really appreciate it, Ryan. Thank you so much. So, it's good that the food's coming. That's great. Thanks to everybody for your patience. I'd love to open up the Q&A. So if there's anybody that has a question, feel free to raise your hand. I see one hand here. So Neil.
Neil, how you doing?
Good. I have a question on a property I'm looking at. It's a self-managed property. And seller gave me spreadsheets for a T12
and reconciled
and a rent roll and just Excel spreadsheet. How do you trust something like this?
In that scenario, we want to. In that scenario, a little bit depends on the property. So I don't want to be too broad, but in that scenario, we would underwrite the deal as if we managed it. Really, on the T12, the big thing that influences our pro forma is the trend of revenues and occupancy and what clears the bank. And, I'm simplifying this a little bit too much, but generally that's a large element of what the trend of the property is. And then we want to look at the utilities. We're not super concerned on what they're paying in payroll, because we know what we're going to have to pay. We're not super concerned with, we'll look a little bit at what their insurance that they're paying, but we're going to bid out the insurance, see what you'll actually pay under us. Or in insurance, you'll be paying the same or more than we do because we have a master policy. We're not super concerned because after we walk the property, we'll have an idea of what the maintenance ratios are going to be. That's a very common issue that we have. Now the thing is, I want to see the last 6 months in actual water, electric, gas bills. I don't want your stuff. I want to see the PSA should state that you get to see the batch deposits to make sure the revenue matches. As far as everything else, it's not super relevant because it's self-managed. It could be an owner that shows up at the property and is unlocking doors for people and, running over to Home Depot to get some surplus here and there and, scrimping on everything. Or he's provided the manager with $200,000 payroll and a Cadillac insurance policy. You know what I mean? So we don't look at the historicals very heavily on it. It's always preferable to have it, but it's actually not something that would scare the bejesus out of me, with the caveat that you need to have the actual bank statements that support the revenue that they showed that they've collected. And you need to have all the utility stuff, the actual physical bills given to you. And, you might want to, before an LOI, at least be able to confirm that the insurance is proper, and the taxes we can look on our own.
Great question, Neil. Thank you. Anybody else have any questions? Don't be shy.
Everybody carb loading? Guess we're doing a 10K after this.
Jimmy, any questions, Jimmy? All right.
You start asking me questions. Nothing? Or you guys just have your cheese dip in your mouth?
I can say that you repeat it.
So with the device that looks at the water leakage, I'm pretty much actually confused. If you said you were a property management company, you own it. So are you an investor as well, along with that? Like
in apartment buildings?
Yes.
Yeah, I have about 700 units on my own, and then over the years I've syndicated I think another 1,400 units,
Okay.
and they're all managed by Wehner Multifamily.
Okay. So when you go in and buy another multifamily property, so do you look for something like that, like a leak device that tells you about those things, or that is after you buy the property that you install it?
Yeah, no, I mean,
that would be a good indicator if, like, already.
yeah, it's an interesting thing because it's a whole separate business now. Linkaware has other investors and like 6 employees on that one. You know, we could go in and put the device on to see if you have a leak or not. I don't know, we'd have to charge for it. Yeah, that might be good. If you're underwriting what the deal is and they go through the pro formas, hey, we're going to fix leaks and it should be down to 50 or whatever dollars a unit a month or 60 or depending on the building. You should probably just underwrite to that scenario, and then we put it in and it goes to 40. It's all gravy at that point, right? Okay. So you don't want to skip that. You don't want to underwrite. Get too aggressive on underwriting savings and all that stuff up front before you're buying an asset. And I'm sure you guys have had some of that back and forth with Fernando. Hey, can't this happen? Yeah, maybe it could. I think so. But here's what I'm sure can happen, and here's what potentially can happen. Right?
Yep.
When you get it too skinny, anytime you sneeze wrong, and you won't hit the mark.
No, well said. Ryan, any thoughts on? I mean, it's you know, I think when COVID hit, I know that I was like, oh, now's the
Time to buy.
yeah, now's the time. We kept on bidding on deals and trying to put numbers on things. Even the world was crazy and financing was crazy. But you know, one thing that we were just surprised by, and now it's evident, but that COVID discount became a COVID premium, right? I mean, assets cap rates compressed. You know, where do you think we are in the cycle, and what do you think's next?
If I knew that, I'd be in commodities trading. I wouldn't work for a living if I. It's really hard. I mean, they just printed over the last year and 3 months. I thought it was $6 trillion.
It's a big number.
Yeah, so it's a big number, and it's as much as they printed from 2008 bust to that period. So that's a lot of liquidity. That is, I don't know. I'm not as much of a historian on what's happened when that much liquidity has hit the market. I don't think that the trend can continue to do this, or hopefully it doesn't. Hopefully they don't print another $6 trillion. I don't think that those increases in pricing and so forth is as much based on a huge improvement in operations and more on these external macro events of extreme liquidity. But at the end of the day, you have to put your money somewhere. You want to put it in a hard asset that better tracks inflationary pressure, or do you want to go in something that? Can you hear me? Sorry about that. I think I did something wrong. I don't know where we're in the cycle, Ryan. I'm just not 100% sure where we're in that cycle. I am a huge bull on Texas over the next 10 years. Over the next 3 years, in terms of valuations and the economic environment and everything, I don't see other states responding quick enough in terms of business environment to stop the incoming flow of people and businesses to the state. So I'm a huge bull long term, 10 years out. With my money, I'm always making 10-year decisions. As far as 1, 2, or let's say 3 years out, I don't know. 2 years out, I know even less. 1 year out, I know nothing. Because I don't know what the Delta variant, I don't even know if it's going to have a big impact just psychologically, or if it really medically is going to have a big impact. I don't know. I don't know what happens when you pump that much money into an economy, exactly where it's going to iron itself out. But I never recommend people try to time markets. That's why I kind of preface the new investor needs to make sure that something works in a less optimal situation, just on a monthly cash flow situation. You know, 'cause I don't know. And honestly, I don't think you guys know either. Or Jim Cramer on Mad Money. I don't think he knows either. I don't think anybody knows. Or maybe a few multi-billionaires have a better idea than us. That's about it.
All right. Okay. If there are, sorry, you got a question?
We got another. Want to know if he's come up with any novel ways to deal with the eviction.
Question was, do you have any novel ways to deal with the eviction moratorium?
I know that we have had success in Texas, especially, not as much in Oklahoma. I don't know that level of detail at this point, but it's basically you have to give the 30-day, they have a chance to fill out the TRR, and then you can't evict them. In certain markets, in San Antonio, if they do not fill that paperwork out, they'll let us evict. Certain of the cities in the Metroplex do not allow that, depending on the judge. Some do. It's one of those things that you just can't miss a date on any of that. I know that we do have a thing, but maybe she would know. I don't know that level of detail.
Do you mind coming up with Sorry.
It was extended to October 3rd, and so there was a lapse, and so we were able to go ahead and send out 3-day notices, and this is for Houston specific. We were able to send out the 3-day notices. We did go ahead and move forward with the eviction. We're winning evictions and even winning writs at this point. We did have to go back to 30-day notices right now, but we are seeing judges granting those.
Yeah, I remember at the executive leadership team meeting, I was talking to Sergio, the VP of operations, and he's like, it was at the beginning of this month, there was a week,
4 days.
4 days space, and it was like, get all the checks out, get all the evictions down, because we think it's coming back, but Congress isn't in session, so. We did, there were some people that worked weekends instead of just getting the checks printed to process as many as we could.
Yeah, absolutely.
Yep.
You had a really good expansion of your company. What mindsets or strategies did you use to keep the culture in your company?
I'd love to say I've written a business book, but I haven't. It's who I am, I got into the business because I felt like my property management company was treating it like my building, not like his. And I'm a firm believer in the golden rule as it relates to personal relationships, business, personal. I'm a huge believer in that as part of my religion. My philosophy on life. And so I've always approached it that way, and I think that the biggest mistake a lot of businesses try to do is, let's go have a weekend thing at WinStar and act like and get these consultants that try to have us replicate Southwest Airlines culture, and it doesn't work. People see through that stuff pretty easily. it really has to come from the top down. If you're that way, we had a policy forever, which is no vendors ever to buy you lunch, anything. I don't want to bring pizza to the office, blah, blah, blah. You don't get anything for free ever. You go out, anybody that goes out to lunch with somebody always pay. And I was always looked at it strangely when I met with vendors, because I was like, no, I'll pay for everything. I pay. Because human nature is, oh, the guy gave me a steak. Well, it's maybe not, what's the Latin word for that? Maybe it's not quid pro quo, but if you're looking at two different vendors and one is a wee bit higher, but it's a guy you like that you had drinks, that bought you drinks and blah, blah. Human mind is going to point to that one. So I couldn't say that and then let insurance brokers take me to baseball games and to cowboy games. So it really has to be something where you practice what you preach. That's what they see all day long. You tend to attract those type of people. The people that don't fit within that, they end up wanting to leave, or they're forced to leave. And so it really comes from the top down. Your company is going to be a reflection of the way you are. It's like telling your kids not to smoke and then smoke in front of them. You're going to go, yeah, and the minute you leave, they're going to go through your packs and start smoking. So that's really that's the difference. And it changes a little bit, because Weiner, for the first 5 years, called it personality. I was like, oh, go fix this, and we'll run over here, and then, as you get bigger and bigger, you need an HR department. You need to do certain things so you don't get these frivolous lawsuits from fired employees. You need to be things somewhat become less fun. We stopped serving alcohol at the Christmas party about 6 years ago. The first half of our Christmas parties were great. The part went down. It was like, no, not anymore. It's too big. It's too many people. We offered Uber rides for everybody, and a bunch of people still drove off drunk. All this stuff. So some of that stuff does become, processed, and becomes a little bit more of a bureaucracy. You can't beat that. The larger you get, you have to become more like that. But I really want that core. My main focus now is not as much all those little things, but just at the core of treat. Have the empathy to treat that client's money and asset like it's your own. I've been cheated 1 million times through the decade that I was there, from owners too. And I'd have people that were the executive team, and I'm like, no, he gets everything back. Well, then he ripped us off. I don't care. That's on him. That's on me. We're not going to do that, period, ever. And I won't even cheat the cheater. So when people see that, they experience it, they replicate it. I don't want to say employees are like kids. They're not, but there's a certain aspect of it. They're going to fall in line with the way you act. And maybe that's why they had real salty language and dirty language like me. Some people don't dress well either. For good and for bad.
All right. Anything else?
Elementary question, but maybe I can stretch it a bit. But for the newer people, or some people that are trying to understand this, there's multitudes of ways to get invested, right? You passively invested, or you sponsor, or you syndicate a deal. But the big thing that I'm always, and I'm a big proponent, and it sounds like you are as well, Ryan, but there's always someone smarter in the room. But you get all these deal sheets, or you get guys like these guys reaching out, hey, we have a new deal coming online, and they send you this huge packet of endless detailed and thought out stuff. And you talked about this in your speech, but what is it for the lay person? What are we looking for? Is it a certain thing that we're attracted to, or is it not cheating the deck that's set, but just looking it over and being able to understand a little bit more, rather than just passing it off to a friend and trusting his opinion?
Yeah, and this isn't probably the answer you want to hear. It's like when somebody goes, "How did you lose weight?" Diet and exercise. So it's reading through those entire documents, using your
I can say it. You look great.
Yeah. It's using your own common sense and your knowledge base and going through it. Like we said, we're not doing advanced calculus. It's addition and subtraction, maybe some very basic algebra, and it's going through and making sure things make sense to you. Certain things that you have no experience of, like, well, I don't know if it's this amount of tubs or whatever. A lot of that is going to be based on finding the right asset manager, finding the right property manager with the trust. Just like you said, I don't know. I have people that I trust. I put people that I trust at my properties. Do I know 100% that it went this way or that way, or do I agree with every decision? Probably not. But I know I generally trust them or have a very high level of trust, and that they're going to be more experienced in that space. And there's no easy, quick way to that. That's through interpersonal relationships, the little tales you get from people, whether they're a bullshitter or not. They're real salesy, salesy people are supposed to sell used cars. This is stuff where people are putting their investments. There's that touch and feel, the normal human interaction, and I trust this person. I've seen how they treat other people, and there's no real shortcut to that. In terms of understanding the deals yourself, it's going through these big packages, it's running numbers, it's diet and exercise, it's eating less and exercising more, right? There's no easy way to do it. If there was, every moron would be doing it, and then the cap rates right now would be 1%.
All right, guys. I think we're at the end, so we're going to ask Ryan probably the most important question of the day. So we have
boxers.
We have 19 people signed up on the hard copy form and 19 people electronically, so it's been very symmetric.
19 or 90?
19.
Oh,
so 38,
wow.
38 total.
Well, I gotta get my name on there then.
Yeah, no, too late. So what we're going to do is do the giveaway as you mentioned. So Ryan is going to pick a number between 1 and 38. Make friends with one person in this room, and and so if it's an even number, I'll go to the list here. If it's an odd number, I'll go to the list here. Count down and pick the person. What's your favorite number?
$1 million. Let me go with 21.
21. All right. That's it. This one, right?
Blackjack.
All right. I hope I'm saying this name right. Jackson Napoli. Jackson.
Bingo!
All right. Thank you. Once again, thank you for everybody for coming. Ryan, do we know who our next guest is already for next month?
Yes. So, we one of the things, Robbie spent a lot of time doing the QR codes. So there is a spot. We'd love to hear from you, feedback on today's session, as well as speakers that you want. And we picked a CPA for our next session next month. So same place. We'd love to see you. Invite your friends. Vince Porter. He actually does my personal tax returns as well as the returns at our properties. So. That'll be great. And I mean, honestly, if you haven't heard about the tax benefits of investing in multifamily, it's incredible. Almost too good to be true, but it's real. And then also for the gentleman that asked the question about, what to look for in investments. I didn't get your name. Doug. I'll I have something for you. I put together 25 because I was like, you get so many decks and you meet so many people and no one's going to tell you, hey, invest in this, it's a bad deal. And what's hard is parsing through what's good, what's not good. So I put something together. It's called 25 questions every passive investor should ask. So just my time working on Wall Street as well as looking through 400 multifamily deals. So happy to. It's on my website, lifechangingcapital.com. So yeah, check it out.
Yeah, notwithstanding his Wall Street background, very honest guy.
It is a reputation business, so it's you rub an investor sideways or communication's poor, and they're probably going to tell their friends. So it's the reason that I spend time with Ravi is that I think we think very similar, that it's a long-term play for us, and it's very reputation focused. So guys, I really appreciate everybody taking time out of their day. Ryan, thank you again. He came the farthest from the FW, so really appreciate it. It's been a pleasure.
I appreciate you guys
That's great.
inviting me.
Fantastic. Absolutely.
Thank you so much.
And you got a good first name.